Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's date, March 14th, 2015. I'm going to talk to you about answering this question: when is a trend over? And the answer to that is when the market tells you. And I'm going to demonstrate that by taking a look at the sterling versus US dollar. I posted an article on our website at ForexLive.com about the pound versus US dollar and how it has moved 850 pips in 12 trading days. That does not happen that often. In fact, you need to go back to 2010 to the last time the market moved that amount in that shorter time period. And in that time period in 2010, the market actually moved about 128 pips from our high to our low, and that was in about 10 trading days. So 850 pips in 12 trading days doesn't really compare to back then in 2010. Nevertheless, the move of 850 pips is a significant move in a short amount of time. So what does that mean? And so to some of you traders out there, it means that it is overdone. To some of you, it means I should be looking to buy. And the answer to both those questions for me is that yes, it may be overdone. Should you buy? And the answer to that is no. Okay? And you may say, but surely, Greg, the odds are that the price will rebound. At this point next week, we're probably going to see a higher price in the pound versus US dollar. It's a better chance that we're going to go higher from here than lower from here. And that may be true, but we don't really know. You may say that the pair is way oversold from an RSI perspective or from a stochastic perspective, and that may be true too. But we know that the market can become even more oversold. You may say that comparing to 2010, things are better, much better in the UK than they were in 2010. So there's no justification for the pound versus US dollar be below the 150 level, let alone at the 147 level. So this is a justification to buy the pound versus US dollar. And quite frankly, I cannot argue against those judgments of what you think. But what you think and what the market is telling you is two different things. And what I mean by that is I know by looking at the chart that the chart is showing me still bearish. Let's take a look at the hourly chart. And if we look at this chart, what is the direction of the price? It's to the downside. Okay, and that's showing me that the trend is still to the downside. Now, just looking at the price doesn't tell me anything really. It tells me that the trend is to the downside, but it doesn't give me any other clues as far as when the trend might be turning back to the upside. When control might be started to be taken from the sellers to the buyers, and that's what I'm looking for, is that level of control. Who is in control? And I know from the price action that the sellers are in control. But I need to apply tools that are going to tell me that the buyers are taking back control from the sellers. And these tools that I use are just not any ordinary tools, okay? The tools I use will tell me bullish above, bearish below. So I call them unambiguous trading tools, okay? Either bullish above or bearish below. It doesn't tell me oversold or overbought. That is an ambiguous trading tool because oversold can become more oversold. All right, it tells me unequivocally that this is a bullish above, bearish below type of scenario. So some of the tools that I use include a moving average, and the blue line here represents the 100-hour moving average. The green line represents the 200-hour moving average. So when the price broke below the 100-hour moving average right here, and then came up and tested the 100-hour moving average right here, what was it telling us? It was telling us bearish. We're staying below the 100-hour moving average, and as long as the price remains below that 100-hour moving average, the bias remains bearish. Now, it went below here, but what did we get below the 200-hour moving average here? No. So it was still bullish through here. But right here, we stay below the 100-hour moving average. So that's telling us bearish. And that was the last time we were above the 100-hour moving average. Right here, right at the top, right when the last test of that 100-hour moving average occurred. So that's what I mean by an unambiguous trading tool. It's a line in the sand that tells you bullish above, bearish below. Now, another tool that I use is a trend line. So let's ignore. Let's just take a look at the market and what I would do with a trend line in this chart. So if I were to draw a trend line as the market moves lower here, where might I draw a trend line? Well, if I put a trend line from this point right here and connect it to this high right here. All right, that would be a logical trend line right here as the market was trending further to the downside here, coming down toward our 150 level. We reached a low here of 150.29, and surely the pound versus US dollar can't go below the 150 level. It has no justification of going back below that level. And that may be true, but what I need to see is that the control is taken back from the sellers to the buyers. And how do I determine that control? Well, we know the 100-hour moving average is there, but I can also draw a trend line. And this trend line connects to a high, to a high, to a high, or near a high right here, and then right here. And so when the market comes up to this point right here, can it get above that trend line and prove that the buyers are taking control from the sellers versus this tool? And the answer is no. It can't get above that trend line. And so the sellers remain in control right here. Now there's another tool that I use, and this is a Fibonacci retracement. So if I put a Fibonacci retracement from this point to this point right here, I want to see that the market gets above the 38.2 to 50% retracement level. If it can get above that level right there, that would be more bullish. Okay, it would say that the price is that the buyers are above the 50% of the last trend-like move to the downside. Are we able to get above that 38.2 to 50% retracement? The answer is no. What if I move this down here and made it easier for the buyers to take control above the 50% retracement by saying that this trend move to the downside, if we can get above the 50% retracement and above the trend line, that would be two signs that the buyers are taking control. Now, looking at this move to the downside, are we able to get above the 50% retracement? No. We only move in between the 38.2 to 50% retracement, and so the sellers are remaining in control. The buyers have not taken back control. I am letting the price and the tools dictate whether the market is oversold or has the potential to move higher, or is the potential more to the trend to the downside. So these are why you use tools and why you use them in this way. So it's clear that the buyers aren't taking control, the sellers are remaining in control. Now we do have this bottom right here, and we do find a support here. And at this point right here, we actually move above the trend line. So are the buyers starting to take a little bit of control? Yes, but are we seeing any momentum here? No, we're not seeing any momentum. How do we know we're not seeing any momentum? Well, we can't get above the 38.2. We can't get above the 100. Those become targets on the top side. And so one target is the trend line. Another target is a 38.2, 50% retracement, 100 bar moving average. And those aren't getting broken. So even though the trend line's broken, are the buyers taking full control? No. If we were to break below this double bottom right here, who would take control? The sellers. And that's exactly what happened right here. The sellers took control back below the trend line, back below this low right here, and the market took off to the downside in another trend-like move. So now at this point right here, I can move my trend line back up to this point right here, and define a new trend line, okay? I can also put another Fibonacci retracement in, measuring the corrective move of this trend-like move to the downside. And what do I see here? Let's get on that line there. There we go. All right, what do we see here? The market actually comes up to the 50% retracement line, and what do we see? We see the market back off right here. So we're holding the 38.2 to 50% retracement. Is that bullish or bearish? It's bearish. But the market doesn't go down that far. In fact, it starts to move back higher, and we get above the 50%. Are the buyers taking control? Yes, but what do they have to do next? Get above the trend line. Can they get above the trend line? Can they get above these previous lows? No. And so we see this failure right here. And oftentimes failures in a trend type move are an invitation to go back short again, to sell the market again because it couldn't even get to the next levels up here. And they're not far away. And so the market is telling you right here, get out. And you can see that in the price action. You see how the market just trends all the way down through our low level right here. And what happens next? The market comes back up and corrects up to the prior low right here. And can we get above that level? No. Are the buyers taking control? We can't even get above the previous low, let alone a Fibonacci retracement. And so we see the market continue its move to the downside. Now, let's put a parallel trend line in here from our top side trend line, because we have this Nice little trend line with 1, 2, 3 different points along it. So let's just put a parallel trend line in and connect it to our low right here, because a lot of times the market will stay in a channel. So on Friday, what did we see? We saw the price move sharply to the downside. And that move to the downside actually took us below the bottom side trend line right here. Is that an indication that the low is in place? No. We're staying below that trend line. Is that an indication that the buyers are taking control? No, the sellers are still in control, staying below that trend line. Now let's put a Fibonacci retracement in. And we might put our Fibonacci retracement from this high right here to this low right here. Trying to make it easy for the buyers to take back control against just this baby move right here. And we see that the 38.2 to 50% retracement of this leg to the downside comes in at 147.75 to 148, 147.99 actually. So in trading going forward, if we were able next week to get above the 147.75 to 148 level, the 38.2 to 50% retracement, and stay above that level, what would that tell us? It would tell us that the acceleration to the downside below the bottom trend line failed. It would tell us that the market moved back above that bottom side trend line and above the 38.2 and the 50% of this last leg to the downside. And at that point right there, on a move above the 148 level, I will start to be thinking that perhaps the buyers are taking back control. Now, have they taken back full control? That will be determined up here if we're able to get above this upside trend line or the 100-hour moving average. But at this point right here, and staying above the 148 level, that would be significant for me, or somewhat significant that perhaps we have a potential to move back higher. It is not until then and only then that I would think that the buyers are taking back control and the sellers are losing control. Until then, the sellers are still in control and we have the potential to move further to the downside. Ladies and gentlemen, it may be overdone. The market may be oversold from an RSI perspective, a stochastic perspective. There may be comparisons to the past that say that the UK economy is not as bad as it was in 2010 or any other time when the market was lower than it is right now. But what I see, the charts that I use, the tools that I apply to those charts, it's telling me that the sellers are still in control and the buyers have not taken back control. It's control defined by technical tools that will tell me either bullish or bearish. And if I see those tools turn around, I'm with you. Until then, I'm with the trend. And the trend is where I want to be. I want to attack the currency trends. My name is Greg Michael Oskin. Good fortune with your trading. Bye-bye now.